Welcome to the Off Street podcast featuring Adam Reiner and Sean Dan. Off Street contains general information that is not suitable for everyone and contains certain forward-looking statements of future possibilities that, due to known and unknown risks and other uncertainties and factors, may differ materially from actual results. As such, there is no guarantee that any views and opinions expressed herein will come to pass. Off Street is presented for informational purposes, and nothing contained herein should be construed as a solicitation to buy or sell any security or as an offer to provide investment, tax, or legal advice. Additionally, this communication contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to their accuracy or completeness. Adam and Sean are employees of Marshall Financial Group, Inc., a registered investment advisor. For additional information about the firm, including its services and fees, send for the firm's disclosure brochure or visit advisorinfo.sec.gov.
All right, Sean, it is Monday, November 27th. We both survived Thanksgiving weekend. No one put a damp turkey in a deep fryer.
Damped? What does that mean? Is that a saying? Is that a euphemism?
Let's start over. Trying to come up with creative cold open.
No, I think that was great. That was good. You should have. Just keep going from there. We can keep that in.
All right, I'll start over. All right, Sean, it is Monday, November 27th. I always get the month wrong, it seems like. We both survived the Thanksgiving weekend.
Yes.
No one put a damp turkey in a deep fryer and started a fire, so that's good.
No. A damp turkey in a deep fryer. No one did that.
You know, they always give those warnings, like on the news, like the week of Thanksgiving. Like,
no, I've seen the videos.
The turkey has to be dry before you throw it in the deep fryer.
I didn't know that part. I've seen this stuff of you have too much oil in there and then it starts to fire. I didn't know.
Too.
I didn't know if it was the damp turkey.
Yeah, it has to be defrosted. Can't be frozen.
I didn't know if that was a saying.
Public service announcement right there.
All right, so yeah, no major house fires, no deep fried turkeys. Sounds like we each had a pretty good weekend.
Too fast. They always go by too fast.
Too fast. You said it's a long and fast weekend at the same time. I think that's a very good way of putting it.
Yes.
We're in a long and fast period of the year to the new year at this point.
So I think there's only 27 days till Christmas.
Yeah, crazy.
Then shortly thereafter, we'll be at spring training.
Nope, not engaging in that. Not engaging in that. But as we get to December, you're approaching your peak self, your true self, right? Christmas time, Adam.
In my mind, that starts November 1st.
I know, but you're building up to it. I feel like you can't fully dive in until post Thanksgiving. Now you're like approaching your true form.
Yes, the appetizer holidays are out of the way. Now we're getting there.
All right, so you're just getting into your sweet spot.
Yes, I know. Christmas music or holiday music officially turned over on the radio on November 15th. So Sports Talk Radio and Bloomberg have to take a back seat for a little bit on my drive into work.
Oh, man. I wonder what like the Nielsen people think of you. Like the ratings people. Bloomberg and Christmas music. What a 1-2 punch.
I probably don't fit neatly in
you're the outlier.
But we are at that time of the year where the best ofs or of the years start to come out. And today, Merriam-Webster picked their 2023 word of the year, and it is authentic. And they say the line between real and fake has become increasingly blurred. As a result, in social media and marketing, authentic has become the gold standard for building trust.
It's a good word. It's good to use this year. They talk about the AI, the social media, all the Elon Musk stuff that's been going on. I think it's very apropos for this year. I know last year I think it was gaslighting, which kind of felt like somewhat of a throwaway word in the sense that it just was a buzzword last year. I think authentic has a little more bite to it.
Yeah, I feel like last year could have been inflation. Could have given the economists a win with a word. But I think authentic is a good tie-in for a way a lot of people may be feeling this year, just for consumers in general. It seems like it's become increasingly difficult to determine what's real and fake in the underlying economy. We can look at the equity markets this year. The S&P's up high teens, though when you take out those Magnificent Seven stocks, the equal weight return is more mid to low single digits.
Yep.
When we look at the consumer, they've been very resilient this year. Is that authentic? Is that durable? And then when we look at inflation, is the slowdown real? And we'll get into some of this during the rest of today's episode. But let's start with the consumer. It was a big holiday shopping weekend. Black Friday, Cyber Monday today.
Yep.
And it looks like things are going well.
Yeah, some surprise beats, it seems like. We got some data today from Adobe. It looks like Thanksgiving, Black Friday, this Saturday, Sunday, and Cyber Monday. That's kind of how they segmented it. Pretty good growth across the board year over year. Expected to spend $12.4 billion today for Cyber Monday, which far exceeds Black Friday spending. That kind of surprised me. I guess maybe that shift from like brick and mortar to e-commerce should make sense. But
it's funny to see how that transition has happened just like over my lifetime. I remember waking up early to go to the store, and then it's just all become online. Sales start earlier. You're not waiting for like that one day anymore.
I barely caught the tail end of that. I vaguely remember at like younger, maybe elementary school, middle school, even going Thanksgiving night at like 9-10 p.m. But you're right. Now it's like you don't see the videos of people trampling each other at Walmart anymore for TVs.
No,
I feel like that was the annual.
I guess.
Yeah, maybe some decorum has been added back into Black Friday. But
I can remember being in college, waking up early to stand outside of a Circuit City.
A Circuit City. That's pre me. That's pre my time.
Yeah, I think they died in 2008.
Okay.
I think that killed Circuit City.
Tough conditions.
Anyway, go ahead.
But yeah, good data. I guess maybe the only concerning point is the use of buy now, pay later options are up 14% year over year, looking at last November versus this November. Again, you talk about authenticity of the consumer. Is this all credit that we're buying on, or is this cash? Who knows, but something to keep an eye on there.
Yeah, is that a good thing or a bad thing? The buy now, pay later. I know just having Bloomberg on today that Affirm, the buy now, pay later stock, is up quite a bit today.
Yeah, I think like all things with credit, it depends on how it's used. Like credit can be a good thing when it comes to buying a home if it's done responsibly, and then it's a bad thing like when you have a situation like '08. Buy now, pay later stuff scares me a little bit because it seems like a lot of it's predatory. It usually gives you really good like no interest financing if you pay within a certain number of days, but then they hit you with these crazy rates, kind of like a more predatory credit card. So I don't know. I think we have to wait and see with that. But like anything, if it's abused, probably not a good sign.
Yeah, if we do go into a recession or the economy goes into a recession in 24, it'll be interesting to see what happens to those buy now, pay later companies. Like once the tide goes out, what do we have?
Yeah,
left?
they're not all going to survive.
That's a conversation for another day.
Yeah, but I think we're at this point with the consumer where it's watch what I say or watch what I do versus what I say with the U.S. consumer. We've talked at length now. The consumer's gloomy. Everyone's feeling bad. But then we beat on our Black Friday spend and our Cyber Monday spend pretty easily. So we're going to pout about it, but we're going to spend for the time being.
Good segue there, Sean. U.gov, which is the polling website. I don't know, better description for them. Do you have one?
It's a good one. That's fine.
The Economist and YouGov do a poll, and it was most important issues facing the U.S. And the number one thing right now that respondents said by quite a wide margin is inflation and prices.
Yeah, still top of mind.
Which feels like that's the driver right now. That's the way people feel. That's impacting sentiment, even though they may not be acting that way. There was a good article on Bloomberg that came out today, I believe, and it was inflation is making Americans hate the U.S. economy.
Yeah, a great Monday morning, really in-depth piece. They went a lot of good graphics in there, kind of talking about since January 2020, that last little bit of pre-COVID world, how are things different? And they said kind of broadly, to buy the same basket of goods that you bought in January 2020 for $100, it would now cost you about $119. And they went through some of those major line items for U.S. spenders and kind of how much they're up. And you get groceries up 25%, used cars 35%, rents up 20%. And really, it's been one of the tougher 3-year periods in recent memory for inflation. It's just things are a lot more expensive. It's not a surprise, but it's tough to see in numerical form.
Yeah, I went back through some of the prior inflation data. Part of the thing that makes it feel even worse is when you look at the 20 teens, especially the mid 20 teens, prices were so stable during that period of time. Pretty much year in and year out, you knew what you were going to spend.
We were trying to spur inflation.
Yeah, and now that it's gone up, people are waiting for it to reset down, and generally doesn't happen with inflation, right? Like, we've talked about it goes up and then maybe the rate of change slows.
Yeah, I mean, we went from one extreme to another. We talk about that ZERP, zero interest policy environment to now. You went from one tail to the other tail really, really quick and without warning. I think they talked about in that article from 2016 to 2019, the cost of groceries didn't move that much.
Yeah, aside
over that time
from
period.
temporary shocks, maybe drought impacting something, there wasn't a whole lot that happened during that time
Yeah,
period.
you get the one-off articles of like there's the bird flu this year, so egg prices are up, but it's not like this year where everything's up, or the past few years, I should say.
Yeah, I can remember drought specifically impacting cattle prices.
Yeah.
And then that flowed through to a bunch of different areas of food.
Yeah, and back then those were kind of cute one-off stories, something to talk about around the dinner table. Now it's like it feels more tangible. It feels like it has a bigger impact. It feels scarier than it felt then. The one part they talked about too that's kind of a double-edged sword, we talked about it a bunch, is home values are up 42% from 2020. It's crazy. For something that's, for a lot of people, the most valuable asset that they own, to be up 42% in that time period is crazy.
We have just the contrast right here. For people like me that have owned homes,
Yeah.
have benefited, and other people like you that are looking to break into that market, leave the renting market, enter the home purchasing market, it's an awful time.
They refer to it as you're almost a lottery winner if you bought in that 2018 to 2020 time range, and now you have that asset, you've built up that equity, and everyone else is kind of locked out. They talked about one person in the article, I think, that right after college they bought a starter home, and now to kind of level up, he and his partner are looking to level up. To do that, the cost of living would go up 5-6x to buy that next level home, which is just, it's crazy.
Yeah, in the article he said he did all the right things.
Yeah.
He was fiscally prudent, bought the small home that he could afford, lived within his means, and now can't take that next step up.
Yeah, I think the quote that best described it in the article was someone talked about, they said, "I feel like I'm on a hamster wheel. I'm not getting ahead." Which I think is a great way to put it. Nominal wages are up, have pretty much gone with inflation over this time period. Nominal wages are up 20%, whereas real wages are only up 0.6%, basically flat. And especially in America and a capitalist society where it's always about getting ahead, it's about improving your status. When you feel like you're trying so hard and like your wages are going up and you are scaling that corporate ladder, but you don't feel wealthier, it's really, really tough.
Shameless self-promotion here, Sean. Last week was interviewed on the Schwab Network.
Yes.
And did a Reuters one on Wednesday. And we touched on this a little bit. I believe it was with Reuters about the income inflation disparity. And maybe one of the things that allows consumers to feel better is inflation comes down. But as inflation comes down, and if wages don't change that much, real incomes start to go up. Real incomes are positive again, which changes the whole dynamic to a certain extent. Like right now, real incomes are flat to negative. So your income is below the level of inflation. Income changes.
You think about there's those studies we like to compare, right? Like it's just natural human tendency. You see those studies about sometimes people would take, if they were offered a salary of say like $100,000, but it's 10% below the average, or they could have a salary of $70,000, but it's 10% above the average in these made-up societies. A lot of times people will take the 70, even though it's a lower number, because in comparison, they're doing better. And when we compare it to ourselves year over year, we want to do better. We want to feel richer. And like exactly as you pointed out with those real incomes, I think that definitely would do a lot for consumer psyche. It doesn't necessarily have to be huge jumps. We just have to outpace inflation by a wider margin, by the margins we were used to pre-COVID.
Feels like next year the consumer is going to be so important for the economy. We're moving away from the market that's been driven by the Fed to one that's going to be driven by the consumer, and consumer sentiment is going to play a big role in what happens next year in the economy.
Yeah, we were talking about how to phrase that for next year, and I think something that I kind of workshopped with you is it's almost like the Fed is like, they've worked on the experiment. They've set it all up. They've done their tinkering with the rates. They've kind of had their hands on it. Now we're at the point where the Fed needs to take their hands away, and it's on us. It's on the consumers. It's on the economy in this Fed experiment to see how everything plays out. So like, I agree. I think it's much more on the consumers to kind of execute from here on out.
And a lot of that will probably be driven by business conditions. We know that the cost of capital has tightened since COVID lows. So how does that impact the labor market? Do businesses decide they're going to retain labor at the expense of margins, or do they let labor go? So what happens with unemployment rate? And some of that will flow over to the stock market as well, especially the business piece of it.
Yeah, and the stock market is on one of its best tears in a while right now. We've talked about it a little bit. It's pretty much since November started. S&P 500 has performed incredibly well. It's currently up more than 8% for the month, which if it closes with gains over 8%, it will be only the second November since the early 1980s that has happened, that being November 2020, the last time, and it has happened less than 10 times since 1928. The 60-40, if it closes at, as of Friday's levels, it would be the best single month for the 60-40 since 2020. So investors are feeling better. They think the Fed is done. Rates are at or near their peak. The soft landing is maybe in the works where we don't need to completely crush the labor market. So it's a good time for stocks.
It's just funny to see how quickly sentiment can change in the market. It was like a switch flipped in November, and this trade became very one-sided, both in bonds and in stock. It was buying.
It took a Fed meeting, and it took a couple of data points, and it felt like, okay, everyone decided we're on board now. We're going to go with this. But we talked a little bit last week. The inflows to money markets have been so high this year. And I think this month is a great example why that's the easy trade, that's the safe trade, that's the comfortable trade. But at the end of the day, if you're a long-term investor, is cash going to get you where you want to go? Probably not. It's stocks and bonds.
Historically, the answer's been no.
Yeah, exactly. Historically, the answer's been no, and it's stocks and bonds. If you have a 1-year time horizon, that's different. If you have a 40-year time horizon, 30-year, if you're investing for retirement or to pass wealth down over generations, it pays off over time historically to stay in stocks and bonds. And you don't know when that switch is going to flip, as you referenced. Just so happens right now there was a switch flip at the start of November, and if you missed out, you're way behind right now, and it only took 3 or 4 weeks to get here.
It's interesting. Since we're entering that year of the best of, we're also starting to see market calls come out. 2024 forecasts from strategists at all the big financial institutions. And so far, the theme of the companies that have released their 2024 market estimates has been one of gains. I think most were probably pessimistic coming into 23, seem a little more optimistic going into 24, though it's still pretty early in this reporting cycle, and we'll see more estimates come out as the month goes on.
Yeah, we'll definitely have to see more to get an idea broadly. It seems like 5,000 is a number that people are throwing around. Are you above or below 5,000?
Yes, it feels like a popular anchor point right there.
That would represent a new all-time high in the S&P. 5,000, obviously a big psychological number too. You want to get some S&P 500 5,000 hats made?
Yeah.
Remember like the Dow 20,000, Dow 30,000?
I remember the Dow 10,000 hats, Sean.
So we'll get some hats made. We'll put it in the store. I don't know. But
S&P 5K.
Not that we ever really make short-term market calls, but I think this is a great month. This month is a great example, and kind of people coming back around to the bullish view is why you'll pretty much almost never catch us being bearish. We generally are of the idea that the market's pretty efficient. Most of the stuff talked about on the news, if it's already being talked about in the news, is probably pretty priced in. And one of the few things that you've been able to bet on historically in the market is over time, over longer time periods, the economy grows and stocks and bonds appreciate. So, another, I guess, feather in the cap of long-term investors this month, and kudos to people that stuck along for the ride.
Should we switch to Uncorrelated?
Let's do it.
So we have 3 stories this week.
Yes. I'm going to start with quarterbacks.
Let's start with claymation.
Okay, claymation. Wide variety, if you couldn't tell from that.
No clear theme this week. So there were rumors that the studio that produces the Wallace and Gromit films, that their clay supplier shut down, and they were going to run out of clay. They were no longer going to be able to produce these movies. They've since said that that is not true. They've purchased enough stock to fulfill their current production, and it sounds like a new supplier.
An alternative.
Alternative supplier of clay, which apparently is this is special clay that is firm enough that they can mold and doesn't melt down under the lights.
I'm not convinced because they did say that they purchased a lot of the remaining supply from this. I think it was New Clay Products.
New Clay Products.
That's who they've purchased this special clay from up to this point, and all they've said is that they've secured an alternative source or something like that to use. I don't know if your whole product is a special kind of clay and you're known it's all these claymation series that they do. I would be a little concerned. If I was working there or somehow an investor in Aardman Animations,
Yeah.
a little concerning. A little concerning if you're a fan of Wallace and Gromit. Will it be the same product? We know it won't be the same clay.
I think if the clay is that important for your business, you should either buy the supplier or have a lot of contingencies in place.
Yeah.
Should something happen to them.
It said it takes over 2,000 pounds of clay per Wallace and Gromit movie.
Okay.
It's crazy. It's a lot of clay.
I was shocked by the amount of money that some of these movies had grossed.
Yeah.
Like Chicken Run, they said grossed $225 million.
So I'm not super familiar with, like, I recognize the characters. Is this like a British?
I think
Is
it's
this
a British thing, yeah.
Okay. Because I've seen some of this stuff, but I don't know if I've ever like seen a full length movie. But some part of my like memory
Yes.
had these guys in there.
Yeah, the sheep are very
Yeah,
distinct.
right? Yeah. There's certain parts of like elementary school that were being unlocked in there, but okay. All right.
No.
So there you go. If you're a fan of Wallace and Gromit, you should look into this story. It's interesting.
Yes.
Supply chains.
You can rest easy for now. This second story is about the Stanley Tumbler. A woman Stanley Tumbler survived a car fire, and now the company is giving her free cups and a new car. So, long story short, woman's car caught on fire.
Well, should we explain what
Okay.
a Stanley Tumbler is?
Okay, yeah,
For
go
those
ahead.
who might not know. So, for those who don't know, a Stanley Tumbler is like a very large, almost obnoxiously large, coffee mug meets Yeti kind
Yeah.
of thing.
That's fair.
And they're known as being like pretty large and clunky, but it's like very trendy right now. It's an insulated mug kind of thing with a big handle on it.
Yes. I think if you're my age or older, you remember Stanley is the company that produced those green thermoses with the screw-off top.
Oh, that's the same company?
I believe so,
Oh,
yes.
no way. Okay. Wow, small world.
Yes. Who knew they were still around?
Yeah. What a rebrand. That's impressive.
But, yeah, I think those are now vintage items.
Okay.
Those thermoses.
Very cool.
But, so this woman's car caught on fire. The Stanley Tumbler survived. And not only did it survive, it still had ice in it.
Yes.
The video that the woman produced generated more than 60 million views.
I think we're up closer to 100 million
100
now.
million views. Stanley caught wind of it, and they offered to send this woman free tumblers and buy her a new car, and said they'll probably only do this once. So don't
burn your car.
Don't burn
Yeah.
your vehicle.
The video, it was on TikTok that it went viral, but it literally is a singed car. And then she picks up her tumbler and shakes it, and you hear the ice. Pretty impressive.
It's a great ad.
It's a testament to the
Yes.
product, yeah. And you got to think the the spend that they would have had to do their marketing department to get 100 million impressions on TikTok, probably way more than buying this woman a new car. So I think it's maybe not a win for the woman involved, but it's a win for the company, and hopefully they'll take care of her and get her a nice new car and some products. So not a win-win, but it
Not a
sounds like
win-win.
everything is going to come out okay.
I wonder if she'll have to pay taxes on that car, Sean.
Hopefully
Probably, yeah.
Stanley will take care of.
Maybe she can
Take
use
care of
some
the
of the
all-in
insurance
cost.
money from the car to use towards her taxes. But anyway. So I love this last story.
Yeah, this is awesome.
This is about the New York Giants backup quarterback. So their third stringer here. His name is Tommy DeVito, and he's the New York Giants' third string quarterback up from the practice squad because of injuries to their other NFL rostered quarterbacks, and he still lives at home with his parents. Yes. And he says, quote unquote, "It was a no-brainer for me. I don't have to worry about laundry, what I'm eating for dinner, chicken cutlets, and all that is waiting for me when I get there. My mom still makes my bed. Everything is handled for me." He says his parents' home is also convenient to the MetLife Stadium. And he says, honestly, I couldn't even find a place closer. If I wanted to, it's less than 12 minutes to get there.
This is like a Disney movie of NFL quarterbacks. It's like a teen who like stumbles into, I don't know, NFL stardom. But you talked about it. He was an undrafted rookie. he barely made the practice squad. He had a rough preseason. It didn't seem like his career may have fizzled out. Now I think he started at least 3 games. He's found moderate success in the past few, but he's making $44,000 per week, which, as much as that is, it's low by NFL standards, but still opting to stay with his parents and sleeping in his childhood bedroom.
Hey, props to him. Also in this article, he's not the only quarterback doing this. The San Francisco 49ers starting quarterback, Brock Purdy, is also saving money by sharing a home with one of his teammates. They're renting it. And he says he's still driving his Toyota Sequoia. He's also on a fairly low-level contract. He's making $870,000. Contract's not guaranteed. I think these are fiscally prudent choices that these young NFL players are making.
Yeah. I think Brock Purdy may be a little more safe now. I think someone's going to pay him when this contract is up, but still trying to be safe right now. Tommy DeVito, I think this is a smart move. He's in the first year of a 3-year, $2.7 million contract. Even with his success, who knows where he goes from here? He's probably not going to get a big money contract. So, yeah, if you only have a couple of years to make money in the NFL, if you can stay with your parents and bank that $44,000 a week, even better. You see all these stories about, especially NFL guys, NFL and NBA guys running out of money.
I believe it is 1 in 6 NFL players will file for bankruptcy in retirement.
It's crazy. So good for them. It makes for a fun read too.
Yeah, I like that one. Brock Purdy coming to the Link this weekend to play the Eagles.
Big game. The Eagles, somehow.
Hey, they find a way. That's what championship teams do, Sean.
I don't know how to describe them. Because at one time, I don't know if they're the worst 10-1 team ever or if they're the scrappiest, the best 10-1 team ever because they find ways to win when they shouldn't. But it's been an interesting year.
I have no data to back this up. It's just my general observation of the NFL. When Tom Brady was on the Patriots, it seems like they very rarely blew teams out. It always felt like it came down to Tom Brady with the ball in his hands with 2 minutes to go.
Yeah, I like that take.
And Jalen Hurts, fourth quarter Jalen Hurts is, I'm not going to say he's Tom Brady-esque, but he's certainly clutch.
I think Jalen Hurts was 2 for 7 in the first half. Let's not go with the Tom Brady comps, but I like
doesn't matter how you start. All that matters is how you finish.
The clutch gene does seem to be there to an extent. So I'll give him that. But
parting thoughts?
I'm worked up on the Eagles now. I got to shift back into market mode here. But be interesting to see how we end out the month. A lot of talk of a Santa Claus rally. How do we go into December? I think one more Fed meeting. That's it.
One more Fed meeting for the year.
Before the end of the year, that feels like something big to move.
Odds are very low for a rate hike. Most people expect a pause. Not only a pause, just for them to be done at this point.
Yeah. So hopefully we've reached this quiet time, positive seasonality trends in the market, and we have a nice end to the year. So now we're past Thanksgiving. It's only a couple more trading weeks until we're getting to the end of the year.
Yeah. Feels like we're at that point of the year where you're just trying to avoid bad surprises.
Yeah.
Like when there's another PCE comes out, you just don't want any shocks.
Yeah.
Just want it to come out pretty much in line.
Yeah. So, but vibes are good right now. It's been a while since we could say we had consistently good. I hate to use the word vibes, but I think it works. Good vibes in the market.
Good
so
vibes.
hopefully we keep them going.
I also think you should knock on wood now when we're done this. All right. Appreciate that.
Hopefully that came through, but I knocked on wood if you couldn't hear it.
All right. All right. Until next week.
Until next week. See you then.